Alrighty, guys. Just started recording. Let's start this quick video off with Amazon here. So, as you guys know, first off, what do we have going on this week that might act as a catalyst? And we have Netflix earnings this week, and they're Prime Tech membership based. So if Netflix does well, I'm going to look for that as a catalyst for tech to start taking off. Okay, because as you guys can see here, this is a chart on Amazon from last week. This is from either Thursday or Friday of last week. So, like I said, we're looking. Netflix has earnings this week. Netflix does well. I'm sure we're going to see tech continue to bounce off of this base support here. So, here's the thing, guys. Amazon, last week, if you remember, we went over the 1745, 1750, or it might have been the 1740, 1745 vertical call spread for November 16th Expo. The reason why I was talking about that last week is A, because we have base here. Okay, so if we entered into a trade on Amazon and for whatever reason it closed below this base, that would be an exit on that spread for November 16th. Also, what you can do is have a spread for next week since we have Netflix earnings this week. Like I said, we have about base support right at 1,700 a share. Amazon, today's candle still within the previous candle. That's great. Remember, guys, on hook patterns, what I'm looking for is, as I've said before, if this candle right here, this red candle from today, if this closed below the previous candle's low, so if this candle on Amazon closed below, let's zoom in a little bit more here. See this green candle here? So Amazon's right here. That's that dotted line that's going through here. That's where Amazon price is at right now on this chart. Okay? So now, if this green candle, and this is why we say Mondays are for observation, because usually by Monday, we're going to figure out where the market's heading, what it wants to do. For example, if we've seen the market sell off 200 points today, no doubt in my mind, we would have been buying some puts for this week's expo. But as you can see, the Dow is green. The Dow's up around 55 points right now. The Nasdaq's only down around 19. So that tells me that we form that base here. That's that base. And like I said, with these types of patterns, guys, these are what you have to look for before you're entering into a position. And like I said, you make your target. Where's your base? Where is your stop area at? And our stop is below the base of 1,700. And like I said, we also have a catalyst this week with Netflix earnings. If Netflix does well, we could easily see Amazon get up to 1,850 to 1,900. So that's what we're looking for on Amazon. Okay, we have that nice base support here. And then furthermore, if we see another candle that's within these three candles here, then that's going to tell us that's our new base. Okay, that this was just an anomaly, and this is the base here. Because see how these two candles are tightly together?
Yeah.
That's what we're going to be looking for.
Yeah, I would say so.
All right. Do you guys have any other charts? Let's look at Salesforce. That's a trade that we made that's still up. It's down on the day, but we're still up for the actual trade itself. We're only up around 11% right now. So look, again, as you can see, guys, the same thing with Salesforce, CRM, just like Amazon. If you remember Amazon here, let's go back to Amazon quick. First off, look at this drop. You had that base candle there that had that one, and then look at where the two candles are here. Just look at the setup of this chart compared to Amazon. I want you to see this. This is important. See this? Same exact type of chart and candles. Amazon here and Salesforce here. So, what are we looking for? Like I said, we have a catalyst this week with Netflix reporting earnings. If Netflix does well, we can definitely expect to see these hook patterns reach those targets. That's the catalyst, guys. Okay. Now, if Netflix does poorly, has poor guidance, and we see Netflix tank, then you better believe that these aren't going to hit our target then this week.
Might be in meetings.
Netflix as a catalyst If we have a good Netflix earnings, we're going to see tech continue to rise. If not, it's going to continue to struggle, possibly get back down to that base. So Netflix is that catalyst we're looking for this week. As you can see, same thing with CRM here, Salesforce, two candles within each other, same as Amazon I just went over. Let's take a look at Visa now.
Yeah.
I deleted my studies I had on here. But Visa was a prime example of a breakout. You could see here, as far as we go back on Visa, see how it rallied and then it came down to that 50-day. That red line there is the 50-day SMA.
It did?
It came down to it and it's been bouncing off of that and climbing, 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 and bouncing. So that's a great breakout pattern to trade. Now, as you can see here, we just crossed below this. And guys, we use the SMAs for this reason. If you remember, let me look
Yeah.
here.
Yeah.
I just had up. If you guys remember this chart right here, this was a definitive stop on Amazon. We're exiting when we cross below because then the momentum has shifted and the stock is likely to decline. And this was when Amazon was 1981.51 a share. So these are the things that you have to look for
Yeah, 'cause
and watch as
of men,
you're
they call
trading.
women.
So that's Visa, same thing. Look at Visa, Salesforce, and Amazon. They all have the same exact pattern. We had that drop,
Yeah.
that one candle there that's like a large, call that a doji there. And then we have the two candles within each other. Look at now. Let's compare them. Let's go with, what did I say, Salesforce. Okay, and compare this with, what's the other one? Amazon. Look at that. They all have similar patterns. You see that drop, that climb, and then the two candles. So let's look. This is Visa. Let's look at Amazon. Same thing. Look at that. Same exact pattern, same exact candles. And then the same thing with Salesforce. Same thing, that drop. There's that candle, and there's the two candles there, and then Visa was the one we just went over. Now let's take a look at Costco. That's the stock we are in right now. And if you could see, this was a, let me get rid of these other comparisons here. This was a hook pattern on Costco we just did. And that's why I just went over tech right now, because I feel that's going to have the same type of hook pattern here, just like Amazon here. So look at this. This is Costco. This is the trade we're in, and this is a successful hook pattern. We're going to see this continued climb. Okay, now let's look at Amazon. Okay, Amazon, same thing here. We have that drop, we have that base, and that Netflix is going to be the catalyst for Amazon, Salesforce, and all other tech to continue to climb. So that's what we're watching. Okay, now let's go back to Costco. So as you can see, here's a phase of Amazon creating the base and now forming that hook. Now, like I said, Netflix is the catalyst. If Netflix does well, we're going to see Amazon and rest of tech continue to climb and complete that hook pattern. It's going to complete that on a good Netflix earnings. Mark my word on that. Now let's see, Salesforce, or I'm sorry, Costco. So Costco here, this is a little bit more developed. Here was our entry. And guys, this is why it's important to always, every trade I have, I'm writing down where's my stop, where's my base, where's support, resistance, what's my target. That's why I'm giving you guys these. You need to look at these. You need to go over them. Okay, once you reach your target, you get out of that trade. You know, and I told you guys last week, I had a problem with Amazon for the longest time because that was one of the stocks I always traded. You know, that was one of the stocks I made my biggest trade on when I first started trading options. I actually got into an Amazon call, and the implied volatility was really cheap. And I got in some calls for $8 a contract. So it only costed me $800 a contract. I got 10 of them for $8,000. And Amazon, that was right before we had that big tech boom. And Amazon reported an incredible Q2 earnings. I remember the day like it was yesterday. It was back in October of, what was it, 20. I'm not sure of the date, but it was in October. It was Q2 earnings they were reporting. And those $800 contracts, like I said, I had 10 for 8,000. They were worth around $260 a contract the next day. So that $8,000 trade was then worth over $200,000. And ever since that, I was just addicted to Amazon. I was addicted to trading Amazon, and Amazon is just one of those patterns. You guys know, once you start trading, you follow that one stock like it's your baby, you know. So Amazon's just been a stock I've always followed and always traded. So, like I'm saying here, don't get attached to a stock, you know, like I did. It could really ruin you. So look for other trade setups. Like I said, Amazon. The only reason why I'm bringing that up because if we look at other stocks, let's look at Google for example. Same setup. Look at that, guys. This is Google.
I'm in a group.
Same setup as Amazon, Salesforce, all these other ones. We have that base. We have the two candles here, and now we're waiting for that catalyst, which is going to be Netflix. Okay. So, guys, in the chat now, yes, Latifa, you can enter your questions there. If you guys have questions, any charts you want me to go over, just feel free. So, guys, look at these are. This is a hook pattern on Google, and it's already formed. It has a very definitive base, drop, shaft, and now we're completing that hook, and that Netflix is going to be that catalyst. So like I said, guys, when you see a stock down like it is today, that's nothing. You know, people get worried and freaked out. It's when you see these types of candles, see this? This is what's important. This is what I want you guys to focus on. See the body of this candle. See how the next candle, the body was completely below that body, that previous body. And then if you look on the climbs here, you'll see whenever we climb, like right here, for example, when we have a wave high or a climb, what happens? You see that body is well above that body from the previous day. That's a climb, and here is a drop, a descent. So when you see candles like this, that's when it's time to worry. Dr. Phil, you asked me last week, Dave, what made you say that tech was going to go lower last week? I seen this. And this is what you guys have to look for. When you guys see candles like this, that's fine. That's nothing. It's when you see candles like this that the body's below the previous body and you continue to make new lows, that's when you exit. And also you're following your SMAs. So let's go back here. Again, you know, when you're rising, look at when you have those climbs, those bodies, those candles. They're not like this. They're not like this. They're not like this. They're not clustered together. They're breaking out. That's why this is a breakout chart. And now we have a hook. We broke down. This is the time if you were buying puts. You're buying puts when you're seeing that body like that. And now we have that base forming. We have the candles congested here, and we're waiting for that catalyst for Netflix. So this is, if you guys wanted to make a trade, this is what you're looking for. So if, let's say you wanted to enter into a trade right now. I'm not entering into trades because I'm happy with the positions I'm in right now. So what you can do is if you wanted to enter into Google, Amazon, any of those other ones, all you'll simply do is you're buying a call or a spread, and your stop is going to be that base, and you know it's going to be a higher risk trade because you have a catalyst this week. Now, if there was no catalyst this week, then I would slowly expect this to climb. But with that catalyst, you're going to get a big bump one way or the other. So if Netflix has a horrible earnings, you're going to see tech continue to fail. Okay, so that's what we're looking for. Now, other things I wanted to go over is gold. Take a look at ABX here. Here's a chart I made the other day. I was looking at gold, but, you know, I really didn't think gold was going to break out. Gold's just been, you know, it's not been something that people have been wanting to trade much, so people stay away from it. But you finally got that breakout. We got a nice channel here, and the beautiful thing about ABX, these options are dirt cheap. You could literally buy this week's expo. Let's say you're buying the 12 strike call. it might cost 80 cents, only 7 cents a time value. The IV is extremely cheap on ABX. So if you want to look for a hedge, this is what I would look for as a hedge. ABX calls. If you're buying, let's say you're buying Google, Amazon this week, and you have that catalyst as, Netflix as that catalyst. So what you could do is you could protect yourself by buying some ABX calls. That way, if Netflix fails, has poor earnings, poor guidance, and the market drops, this ABX calls are going to rocket. And since they're so cheap, since IV is so small and those so little, a dollar move here is going to make you a 400% return, no doubt about that. So that's what you kind of look for with the hedge. Look for something with low IV, because if you look at something with DIA, if you were going to get some puts on this now, see now Diamond 2, this has a nice defined hook and a base. So you're just looking for that catalyst here. So that catalyst to buy here, that's going to be above 255. So once you climb above 255 here, that would be your buy signal and enter into some calls or a spread for a hook pattern on Diamond ETF. That would be my entry if I was looking at Diamond. I'm telling you guys these on a few stocks because I want you to see what I'm looking at, what I'm trying to do, what I'm trying to teach you guys. So once you have that big drop, you're looking for that base. We have that base, and now our entry is going to be above 255 if we're trading the Diamond ETF. So above 255, that's our entry, and then we'd look to get up to, let's see. So we have some resistance right around 259. So 259 to 260, that'd be my target if we closed above 255 one of these days. You close above 255, you enter into calls. If you close below 250, you start buying some puts, because then you know that next wave of selling pressure is coming. So that's what you look for, guys. Any other questions? Let me see here. Disney is looking nice. Disney, I read something about Disney. I don't know if it got upgraded or what. Now, see, Disney looks nice here. Look at Disney. Look at that chart. I mean, it's easily predictable. You had that bounce, consolidation. Let's look out a little bit further here. Okay. So same thing, guys. You have the bounce off the 50, close to it. Now we just entered and broke above the 50 20-day SMA. So whoever asked about Disney, let me see who that was. Oh, Ray. Yeah, Disney looks great here. And if you were entering into Disney, what I would use, let's put in the 10. I took out the 10 for something I was trying to show you guys before. So what I would do is if I was entering into Disney now, I would enter and I would use the 50-day as a stop. That's a pretty tight stop there, right at around 113. It's at 114.23 now. So that would be my stop using the 50-day if I was entering into calls. But like I said, guys, we're looking, like I said, today's an observation day, and this is why. Take a look at this. This is today's chart. Look at that swing. Look at that swing from the lows to the highs. It's a volatile day, but what's nice is if we go out, see how here guys, this is important because this is what I'm looking for towards the end of the day. It's only 1:30 now, but I might as well tell you what I'm going to be looking for at the end of the day. I'm going to be looking to see if this candle right here closes below the body of this candle or within or above. That's going to be important to me, into my decision makings, into my trades, into my stops. I want to see what this candle's doing compared to that one. Okay, like I shared with you guys on, what did I say, Amazon or Salesforce? I think it's all of them. Same thing here. No, it wasn't Amazon, it was Salesforce, I believe. No. Let's see, Visa. Yep, it was Visa. So see how Visa, same thing. It's within the body of the previous candle. I like that. If you're not in Visa yet, let me see here. Visa, I would say November 16th. At 138.70 now. So my target on Visa is going to be right about 145. So if my target's 145 to 147, 148, so you could do the 135 or 140 strike calls for November 16th Expo. And it's simple. On a trade like Visa, your stop is a close below the previous day's candle. Now, if it's a longer term trade, then it's not going to be a close below the previous day candle. Then you're going to be closing with support or with some type of SMA or some base, whatever you have going on. On a longer term trade, it's going to be different than something that's 30 days or less till Expo. Because if this closed below, let's say this candle closed down here, that's going to tell me we still have some downward momentum. And that's going to take a few days to continue. And you have to really think about that with the trades. You have to think, okay, if this stock goes against me and I'm buying, if I'm buying the November monthly expo for November 16th, then I have to think, okay, I have 30 days, probably around 21 trading days until expiration. So how many days is it going to continue to go lower? That's why I'm saying with 30 days or less, we're using the previous day's low as our stop. Because if it closes below that previous day, see what normally happens? So it's going to take a few days for it to drop and then consolidate, just like over here. Look at here. We dropped, it consolidated, here, dropped, consolidated. So all these candles, each one of these candles represent one day. That's time. That's time decay. That's decay of your options. So that's why we say a close below the previous candle for 30 days or less till expo, that's your stop on any type of options that are 30 days or less. If it's longer than 30 days, then we're using a different strategy. And that's important, guys, because like I said, each one of these candles represent one day. And if you have November 16th Expo, that's 1 month out from now. That's 21 days. So here, look, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's 10 trading days. That's around 15 to 16 calendar days. So if it continued to do that, that's 16 days of dropping and then forming that base and then starting to climb. That's looking into a trade and like really seeing, hey, what's going to happen? And that's why you have to have your stops. Because if that continued lower, it's going to continue that momentum, then form that base, and then start to climb. And by the time that happens, your 30 days is up and your option is worthless. So that's why we use the previous day's low as a stop on options that are 30 days or less. All right, any other questions, guys? Yes, Joe, that was Visa November 16th, 135 or 140 strike calls. And like I said, it's an easy stop. And target 143 to 145. And like I said, this week we have catalysts. Usually you don't have catalysts that are going to move the market. This is a big week. And actually, as I'm talking here, markets are soaring here. Dow's up around 76 points right now. NASDAQ is only down around 16. So that's great news. Let's take a look at the Qs. Qs, same thing. Guys, you see how all these charts, they have the same type of pattern. We had that drop, that candle there with the large wicks, and then we have the two candles that are within each other, engulfed. That is the same for all these stocks. Look, same pattern. Amazon, same pattern. See that drop? Candle, two candles. Visa, same thing. The drop and then the two candles. What's another one? Google. I'm sure this is going to be the same way. Yep, it is. Look at the drop, that candle, and then these two candles. They're all the same, guys. And I'm telling you, once you're able to read these charts and you see they're all doing the same thing, it does not matter what you trade. It just matters what type of trade you make. That's going to be dependent on how much money you make. And that's what I'm trying to teach here at TSC, and that's why we're going to continue to do these videos and continue to teach. So if you guys like this, please let me know, because like I said, this is time consuming. It takes away from me trading as well. So, but if it's educational to you guys, we will continue. Alrighty, guys. What time is it now? It's around 1:37, so I'll see you in the trade room. Alrighty. Bye-bye.